Good morning, everyone. It's Rob Folia with Folia Properties at Keller Williams Realty, and interest rates are 3%. What to act now? Just kidding. I'm sorry. April Fools. It is April 1st. It is the first of the month. Sorry, interest rates are not 3%. I just wanted to have a little fun here on April Fool's Day and jump into the market because it is the first of the market, and as always, when it's early in the month, we want to jump in and see what's happening in our local real estate market. So let's dive right in and just take a look at a few things today. Here are the live interest rates according to FreddieMac.com. It's the 30-year fixed average. Basically, I've compiled weekly. You can see they're still high 6%. The blue line is 30-year. 6.79 is what they reported last Thursday. It's basically been in the high sixes all year. I mean, going back to, the end of 2023. It's been mid to high sixes ever since. To me, they very much have stabilized here. I know a lot of desktop experts have said this year that they think rates will drop. Guys, the reality is we don't know. I will beat this drum until I am no longer selling real estate, and that is we need to be acting on the market of the moment. Or excuse me, acting in the market of the moment. Basically, all that means is we don't know what the future holds for real estate. We don't know if interest rates this year will stay at 6.79%, if they'll be 4.79%, if they'll be 2.79%, if they'll be 10.79%. We don't know. So take action now. Based on the information today, you should ask yourself, based on the information of today, what do what let me restart that sentence because I want to make sure this makes sense. Based on the information that we have available to us today, does making a move make sense for me? Does making a move make sense for my family, our household? Does it make sense that we take out a new mortgage at 6.79% if our interest rate currently is 3.79%? To some, it might, to some with that 3.79% interest rate, you might have had a raise or a second income come in, or just your life circumstances have changed, and a higher interest rate on a bigger home, that sounds fine. I mean, it's gonna be different for everybody. Point being is take action on the information that we have available. And as such, let's take a look at some market stats. Actually, haven't even pulled these up yet for the market. I wanted to just get some honest, raw, real numbers here and real reactions for our real estate market. So what I've got pulled up here is what I've been using ever since RealTracs changed over their system to their RealTracs stats. And I think these are definitely worth jumping into and just really seeing what's happening. I've always been a fan of median instead of average. So let's just start with median and go from there. It just kind of gives you a real good snapshot of the market. Averages will always have some lows and high that just kind of skews things a little bit. Usually for a large sample size, it doesn't skew things too much, but still median to me really tells us the the pulse of the market, I guess you could say. And right here is just the median sales price for closed homes in Rutherford County. I just pulled up Rutherford because I think it's still very much a booming county here in Middle Tennessee. It's still relatively affordable compared to a lot of other counties close by. And it's still very much growing. And you can see median sales price for March took a little bit of a dip compared to February. Not much. I mean, you can see here too. There's always constant little slight ebbs and flows that go on. March of 24, 445,000 was the median sales price. Compare that to March of 23 of 420,000. That's a pretty substantial increase. I mean, just doing the quick mental math, that's about 5% year over year. I've been saying for a while now, probably ever since COVID, really. And then we saw that quick boom and then a little bit of a decline. I've been saying that real estate historically matures at about a 4-ish% rate year over year. Like that's an average. Some years are better, some years are worse. Over the last decade or so, we've seen a lot of growth, but some of that growth, because I know there was a stretch there from probably about 2014 to 2019, it was slightly pre-pandemic where it was just 10% year over year over year. A lot of that was to make up for that 10% being above the four, basically was to make up for the recession that we had just experienced. Recessions typically don't impact the housing market like they did 15 years ago. But it impacted it then because that recession was very much brought on by bad mortgages that are not allowed to be written anymore, mortgages where mortgage companies don't put their money there anymore. And so I just say that to say that regardless of what the economy does long term, there will be obviously some ebbs and flows in our real estate market, but it's not going to impact things the way that it did 15 years ago. It's just not. Not unless some things change and lending regulations and lending laws change. I just don't see things changing significantly. But let's keep rolling here because while this is a good trend to look at, I think days on market's a good one. And one of my favorites is median days on market before a contract because that really tells a potential home seller or somebody who owns a home who's thinking about moving what to expect when they hit the market. So again, Rutherford County is a pretty booming county for our area. You can see last year around this time we were looking at about 8 days on the market. Right now, 10. So it's up a little bit compared to where it was last year. 2 days extra is not significant. It's it's not an extra week or two or three on the market by any means. This is telling me that we're honestly heading into a market very similar to what we saw last year. We always see time on market increase the second half of the year, just as what it is. People want to get in their homes during springtime before the school year starts. I say people, most people, some people move obviously December and January and October. I mean, people buy homes and sell homes all throughout the year, but a lot of activity happens the first, 2.5 quarters of the year. By the time we get to August, September, October, it's natural to see time on market tick up a little bit, just like it's natural to see it drop beginning of this year, like it has. Again, I'll be curious to see once we dip into April and May and June what these numbers look like. Does it look similar to last year of 5, 6, 7, 8 days on the market? That'll be a curious one to take a look at. Let's continue with a couple of other things real quick. Pricing ratios is a good one. Again, we can look at median sales to list. It does get a little screwy here just because the way this system calculates it, you can see it's 100 because it's close to 100 is the median. So this one we will look at average. Again, take average with a grain of salt just because there will be some things that pull an average up and down that are the extremes. Just like, you can see it's in a span of what, from December to January, we didn't see it go from 99.4 to almost 0.7% difference in 1 month. If that happened month after month after month, that'd be significant. That's just some normal number fluctuation. But you can see, I mean, it's 99% plus is the average sales price to list price. That just means if a home is priced correctly when it sells, what's it actually going to go for? If it's a $500,000 listing, on average, 99% of that is what, 495. So it's going a little bit above 495 from a sales price standpoint. That's for a home priced correctly, marketed correctly, a home where the seller listened to the agent when it came to pricing and getting it ready to go, at least an agent who understands the market and what's happening out there. That's why we see things like this. One other that I think is worth diving into, and that is supply and demand. Supply and demand is just months of supply. It tells us how basically if no other homes were to hit the market, how long it would take these homes to sell, based on how quickly they're selling. It kind of gives us an insight into demand because we can see supply pretty easily by how many homes are out there for sale. And you can see demand last year was right at 2 months of supply. This year, 2.77. So it's gone up pretty significantly right there. I mean, that's about a 33% increase year over year. That is worth noting. That's good to be paying attention to. That's still a very strong seller's market. And in fact, we're going to look at a couple of other counties now because I am kind of curious of seeing this number be relatively, again, pretty, just a good amount higher than this too. That might be a might be a trend for our real estate market that we should be paying attention to. Again, strong sellers market, because if we look back, and I wish the system would allow me to go back further than 5 years so you could really see what things look like during the recession. But you can see, I mean, during the hottest sellers market we ever saw, we were at less than a month of supply in Rutherford County. I mean, that's the market where if a home were priced correctly, it went on the market, had 20 offers in 20 minutes, it was an insane market. 2.77 months, that's still a very strong seller's market, but it's up. It's up over this time last year. It's up over where we were 5 years ago. So that's good to be paying attention to. Let's take a look at, we'll go back to the year, and I just want to look at a couple others real quick just to see. Davidson County, let's look at Davidson County supply and demand report. Similar. So Davidson County, 3.76 months of supply. We were at 2.67. So again, that's a pretty substantial increase year over year. 1 month increase. That's Again, we're not in a seller in a buyer's market by any means when we see that. We're not in a buyer's market when we're at 3.7 months of supply, but it's not the extreme seller's market that we see when we're at 2. And so what this tells me is that homes are going to be taking longer to sell this year potentially, or there's less buyers that are looking out there, and that's not surprising. I mean, just to jump back to interest rates, if we go back to the 3-year trend line on interest rates, you know, gosh, I mean, this time last year rates were coming down from being around 7. They were in the low sixes at points, in February and into March. And then they steadily rose last year into almost, gosh, into 8% for some. Um, I don't know. All this is telling me when I'm looking at this, that unless rates do drop again, this might be the new normal right here. And that just might mean, a little bit more inventory than there are buyers compared to this time last year. Still a seller's market, meaning still less homes per buyer. And yet, this is intriguing to see this in Davidson. Let's pull up a couple others, the surrounding counties. Wilson County is a good one to check out. 3.25 months of supply for March. Last year, 2.7. So half a month increase, 20-ish%, increase. Again, not insignificant, and yet not anything that to say, hey, sound the alarm today. But yet something that over time could, if that trend continues, could be something to note. Williamson County, 3.5 months compared to 2.8. So again, very similar increase, about 20% increase. Let's just look up one other. Gosh, I don't know. I'm just trying to pull up counties that are close by. Let's look up Sumner County. Imagine we'll see similar. 3.87 months of supply. We were 2.8 last year, so a 1 month increase. So yeah, roughly a 20, 25, maybe even 30% increase for some counties. It's important to note those things because that does show us that if you're selling, it tells me at least, if you're thinking about moving and you have a home to sell, there's a chance we could be coming out of the really strong aspect of today's market, and it's all to me it's all going to be dictated by interest rates. If rates stay the same or drop, meaning get better for buyers, make homes continue to be more affordable by lowering interest rates, that's going to help the market get stronger for sellers. It's going to increase the amount of buyer competition that's out there. But if we see this number stay the same or rise, if we're into the sevens again, I imagine we're going to see this rise because there are going to be less buyers that are willing to pay certain prices. And it's just kind of that natural finding of the market of any good or service that's out there of buyers just trying to figure out what it is they actually need to pay for something, sellers trying to figure out what they can charge for something. It's just going to be a natural feeling out process. It is interesting to me that we are still kind of in flux at the end of March, or we're a quarter into the year. Flux as in what is the market going to look like here in 2024. I'll be curious the next 30 days as to what we're going to see, and I'm curious as to your thoughts. If you're wanting to know more about the market, or if you have a thought on the market, leave it in the comments. Whether you're seeing this on YouTube, social media, if you have a comment about the market right now and you want to know what it looks like for your area, you have a question about it, or you're just getting this in your email and you want to talk, hit that reply button. Happy to help however I can. But as always, y'all, I'm here to help in any way. No question too big or too small. I'm happy to answer them all. Give me a shout, 615-238-7578. Thank y'all very much, and we'll talk soon.